Okay. Let's move away from investing and let's talk about trading. So, I think going down to like the 4 hour is really a nice way to do it. And here's how I want to do it. I want to go to the replay and we're just going to do random bar and I'm just going to do things. Oh, well, this isn't fair. I need to go to a chart that I don't know, I guess. Maybe so I can just Uh, let's see. I don't want to do ES because that's just up. We could do Forex because that tends to trend back and forth, or we could choose a stock. I don't know. Let's choose a stock. Let's go with Meta at a random bar. Okay. Here's where we are. Okay. First thing we see, we're in an uptrend. We're at the highs, not as high as I would like, and there's no signal candle that I would want to take a trade off here. Got a hair in my mouth. Okay. So we're just going to go next candle. Okay. Oh, wait. Is that playing? Or, yeah, okay. And then it jumps. Okay. So this is cool. Let's just take a trade. There's a nice bearish engulfing. It looks like we have a downtrend, right? And it is rejected off of this. You have a high here, you have a lower high, then a lower high here with a rejection. So let's go ahead and sell. Oh, I can't do a sell on this. Whatever. I'll just do it like this. That's right. I should have. Boop. And what you want to do, here's your signal candle. That's your entry. We entered right there a short position. Stop loss a bit above the previous high. You might get stopped out by a wick. So you don't want to have it like one tick there because things are kind of volatile. A little bit of space, but not too much. So now we look right here, risk to reward ratio. It's good to aim when you're starting for 1-to-1 or 1.5 or 2. You don't want to aim all the way like like wait, oh look, this is the top, the trend's over, it would be good to aim for like either 1-to-1 is going to give you a nice high win rate, especially if you're wrong, but it helps you lock in profits. 1-to-1, we'll just make it right there at 1. Risk to reward 1. And then the question is, how much do I enter my position? Well, 1 to 2% of your total trading account is what you want your position sizing to be. So if you have let's do easy number. If you have a $1,000 account, well, 1% of that is $10. $10 is not the amount that you're buying. That's not the amount that you're putting in the position. What you're putting in the position is the distance from where you enter to where if you get stopped out, you lose $10. Okay? So that could mean, what is it? 1.867 And this all gets calculated in your exchange when you do this. It's easy to be like, oh, if I put, what is it, 1.867. So, I mean, since it's 1 to 2%, you could actually, it's 1 or 2%, right? So anywhere between 1 to 2% would be anywhere from $10 to $20, right? Well, if you're risking 1 to 2%, you're in that range right there, 1.867. It's a little bit on the higher side. So put your whole $1,000 account in there, because if it goes right there, you're only going to lose $18. And let's see how it plays out. And you're going to win $18 if it plays out correctly. Oh, okay. You lost $18. Pushing the highs. We wait. And see, I like to use price action or I don't just use price action, so but you're down $18. Big deal. You live to see another trade, right? Now, there's tools that you can use for an edge. Actually, here, before I say that, here's what I want to let's leave the replay. Here in TradingView. No. Where's the strategy tester? When you go to the bottom, oh yeah, you can also do paper trading. So that I would suggest doing paper trading. I am also trying to find the strategy tester button. Where is it? It's not just bar replay. Oh man, I'm drawing a blank here. Where's the... I haven't done it in a bit. No, that's... No. Where is it? I'm dumb. Dude. Where's the strategy tester button? Where is button? Bottom. Is it not? Trading panel. Pine editor. No. Got it. There's a way that you can take positions. I don't know why I'm not seeing it. I'm like, I feel dumb. I haven't done this in a bit. No. No, not like that. Do you have to... Oh, there. Okay. That's where I went wrong. Sorry. Okay. Replay button at the top. Bar replay. I just chose a random bar. Could do another one. Doesn't really matter. Random bar. And then down here at the bottom left, replay trading, trade. So now you can have positions as you go. Market orders mean you buy exactly where it's at. A limit order means you're going to put it in at a certain price. So let's say we want to whatever. I'll say we want to put in an order at the lows here in the hopes that it's going to bounce. Oh. So then we're going to go forward. Did it? How come it's not showing it on the... Interesting. They changed it. Interesting. They changed up this since last time I used it, but still, we're just going to say buy here. And then as you go, it shows you your profit and loss here. And you can also set a stop loss by dragging it. Why is it not showing on the chart? That's weird. Gonna take profit up above? Weird. Do I not? I wonder if I have a setting off. Trading. Replay trading. Oh, that's screenshots. There. I do. I had positions and orders off. So if you don't see it like this, go into settings, trading, positions, and orders. We're going to remove this. Yes, stop loss. This is a 1 to 2. We'll see if we go below. It looks like a breakout back test off of this level, and it pushed above. We bought. Let's see if we can push up to new highs. 2 to 1, basically. Though we could move it 1 to 1. We would have already hit. But let's let it run. Nope, loss. Okay, but this is cool. When you do your replay trading, it shows you your P&L for the period and your percent profitability, average losing trade, things like that. So then you can adjust, you can practice. And that's all that this is about. It's just practice. It's fine to be wrong. You learn something and roll with it. So sometimes they're going to be quick like that. Other times you'll be like, oh man, should I, if it's like going against me for a little bit and like hanging out in the negative, should I cut it? Or should I just let it go to my stop loss? And the time that I would personally choose to cut it is if I'm going to flip my position. Like, let's say I'm in a long here and I think, oh man, this bearish engulfing right here that's a lot of downward momentum. So I actually want to flip my position so I could have got out and I could have gone short here. And now I would be in a short position and I'd be looking for downside. And if I kept it small, we're in another range, it wanted to range and push up. So you'll learn a lot. You'll also be like, well, look, it's already gone through a trend, so it needs to correct a little bit, go up, things like that. Trending, ranging, push up. Are we going to trend more? I don't know. You get to see. You get to go through and look. So I would really recommend using this replay tool and trading on practice here. After you've done that for a while, you can start to develop a strategy beyond just price action. Let's see, what do I have here? Okay. So I want to talk about my bands because I like my bands. I have it right here and I'm just going to copy it. Let's go ahead and put it on this chart. Here's my bands. Oh yeah, see, now that I see that, that's not a good spot to buy. Though, here's how we look at the bands, okay? Here's the bands. We have a squeeze here. What the bands show is volatility. So when they're wide, like in this section, volatility is really high. So that would mean volatility needs time to come down. So from this period to this period, volatility was decreasing. That shows you kind of the potential for a move. Now we have a push up above to this side. The middle line is a 55 simple moving average. It's just the average price of the last 55 candles. So, it averages out because this went sideways. There was the mean reversion. And it helps you recognize, look, we went outside of the outermost band here. That was a big move. When one of the rules that I use is that when we go outside of a band like this, I'm going to expect it to either go sideways like this and have the blue line come catch up, or it'll come back down to touch the blue line. Either way, it's going to come back to the blue line one way or another. If it's this far outside, I'm not going to go, oh man, everybody's buying. I'm going to get in and it's just going to go off to the races. No. This is where you need to be patient or exit your long position, take some profits because it's so far outside. But here we have another setup. Just looking at the bands, this is how I would set it up. We would take a long position right here on this candle. We'll set the stop loss. I hope that's not too low. It's kind of wide. But here's what you do. 6%, and we're going to target 1-to-1. 6%. Okay. This would be our trade. And because it's 6%, back to our $1,000 account, again, you're only risking no more than $20 a trade on your $1,000 account, which this is why crypto is so nice. You can do very small positions. You wouldn't use your whole 1,000 on this. So say we go a third of the 1,000, that would be 300. That's still kind of high for one share. So this is going to be a very risky trade. It's like twice as much risk as I would want to put on. But let's go ahead and buy here. We're going to put our take profit right there where the top of the thing is, and we're going to put our stop loss here. But this is a nice setup. There's a squeeze in the band. I would have rather preferred to get in here where the bands were more squeezed, but you had to pull the breakout and the back test, right? Like I was saying, for it was ranging, breakout, and back test and push above, as opposed to falling right back into the range. Didn't seem like a fake out there, right? And we can adjust our stop loss as we go, but let's just see how it goes. Ooh, kind of dip in. I don't like that. I think I would just cut it right here and wait for another signal. Let's just go ahead and close it as a loss. We lost a little bit, but let's see what happens. And I don't trade stocks as much either, so. Well, that's good that we cut it here because look, it went through our stop loss, so we saved $10 on our account by cutting it early that time. Oh, this is a short position. Now we have a short signal. Squeezed bands, a candle closed outside the white band. So we're going to take a short position here. Set our stop loss to the opposite band and target 1-to-1. I think even 1-to-5 can work, but let's just do 1-to-1 and see what we can get so I can actually get a win. Stop loss, confirm, take profit, right to there. Oh, that's not right. There, 32, 34, 32. Close enough. Now let's see. No. Back into the range. It's a fake out. Oh no. There it was. Big dump. That's what happened. Huh, I didn't even see that. See, it gapped. There was a big gap from here to here. So there's a winner. We just won our 30 something bucks back on our account. And it's way outside the bands, so we're not going to hop on board. It's a little crazy. So let's wait for another trade. And you'll notice it's a Thursday in the morning. Thursday morning. And I would look at your time while you're doing this so that you realize, oh man, it takes some time, you know? Like, you took that one position and you didn't do anything the whole time. I mean, you could have done the mean reversion play. I don't like mean reversion plays as much. They don't have as high of a win rate. For newer traders, I think it's better to just go with the trend. Okay, a mean. Do you guys understand the difference between mean reversion versus with the trend? I guess it's just Valeria right now. But mean reversion, it's way outside. Mean reverting to the mean, the average right there. It would be better to go with the trend. But here's another cool thing with my bands. The bands here are basically as wide as they were here, except now they're wide and flat. So I wouldn't expect any kind of a trend to start. So if it comes right down here again, I would probably do like a range trade, considering this the bottom of the range and this the top, but it might go higher. See, it's just ranging a little bit to squeeze, lower the volatility, cool off a bit. Are we going to get... Oh, see how it stays inside the band? That's not a trade yet. There's your breakout. So let's take a position. And this was all the way back from the last Friday. We held it over the weekend, closed on Thursday, April 25th. Thursday, April 25th. Now we have another position in June. So we didn't take any trades on Meta for a whole month. And this is the 4-hour chart. So we can expect a lot of waiting. And this is why you trade multiple things. So it's like, oh, well, you know, I look at this. I did my one trade. Boom, I got a winner. The bands are stretched. I'm just going to be patient and look for another swing. Meta is not there. I'll look through something else that has this kind of a setup where the bands are squeezed, just like here. Bands are squeezed, close outside. And I would like to do multiple time frame analysis. I would look at like a 12-hour and a daily. Can we do that here? Yes, we can. Beautiful. So the daily is in the middle, but it's working its way up. It's not too bad. Let's cut that in half. 12-hour in the middle, working its way up. And like I said, where are we at in the weekly? Ooh, yeah. Look at where we're at here. On the weekly, this is bullish. You go, but it's gone this far high and it's red. Yeah, that's fine. The bands are really high. Let's just go ahead and I would I would target the previous highs here at 531. Probably with our stop either below here or here. And this is on a weekly chart too, but let's see how it... Yeah, see, we could target the previous highs. Okay, so let me clarify this for you guys. There's been a long trend. Volatility is wide. You can't guarantee that you're going to push up much past the highs. If even to the highs, it's starting to be kind of high risk, I would look for other confluences. But we'll talk about confluences a bit later. But I think with the bands, it's important to look at least 3 time frames. So, personally, I do 1 hour, 4 hour, and the 16 hour or daily. And the reason for that is because multiples of 4 give you a good understanding of market perception, in a sense, the time frames. It's far enough apart that it's not just noise. You know, if you just go from the 1 hour to the 2 hour, it's just going to look almost the same. But you have to go a little bit further apart to kind of understand a bit different of a perspective. So let's do that. Let's just go ahead. I don't know if we can target the highs here. Is that going to be too close? But you can do stuff like this on your own too and practice. This is why I'm showing you this, how to do it, what I look for with the bands. Stop loss right below the band, so this is where we're entering, and whew, man, that's really tight. I don't know if I would even take this. I guess for demonstration purposes, we can see if it'll push higher. It could. But this is why we're doing practice, right? It's low risk. Let's take a buy. Buy. Oh. For a minute at the lows. You might even be able to tighten up the stop loss. You kind of want a stop loss as tight as possible, but not so tight that it goes here and then goes right back up, because sometimes it'll go sideways and just barely touch the bottom band and then go up again. I've seen that happen enough. The point of the bands, in my view, is to see the amount of volatility and the potential for a move. If a lot of volatility has already happened, the potential distance of a move probabilistically decreases. After volatility has cooled down, then there's a chance for volatility to expand again. And we're really pushing the line here. Oh, that's kind of a change in attitude. I think I'm going to tighten the stop loss to this lower band. Like I said, sometimes it can go there. I'd rather win it than lose it. So we're going to tighten the stop loss there, just so we're now at a better RR. If we could do partials, I don't know if I would trim here. $6 instead of 20. That's a quarter. Or no, I couldn't even trim that much. Kind of late. Let's see though. Ooh. Another bearish candle? No, it is wanting to push. Good. Good. Yeah. Like I'm saying, it's not really wanting to push the highs. I don't like that it did it twice on me. That happens. I'm going to tighten the stop loss up a little bit more, because if it goes below this lower band, that's a complete negation of the trend. You have a trend like this, and it can come back to the blue band. and you're completely fine, and it'll push up again. But if it goes below the white band, that's pretty much a signal that your trade is negated in the direction that you're trying to go. Okay, this is what I do with my bands. This is how I deal with trades. Cool. We did it. We pushed through. All right. Winner, winner, chicken dinner. And it keeps going. Or is it a liquidity sweep? Yeah, look, we have lowering volume, less volume well, there was volume at the lows, but much lower volume. See, like I was talking about before, when you have a big push like that, but there's no volume accompanying it compared to here, well, that's probably going to get reversed. And I don't like mean reversion plays too much. Maybe if there was divergence here, like on the daily RSI, which we could start getting into that, other indicators. But kind of like what I was saying before, we want to focus on price action. Each candle, the bands are just a tool to help us understand the potential for price action and momentum. We obviously have upwards momentum here still. And then there's also kind of the more that you study, you'll kind of learn little quirks for each ticker that you're in, for each asset that you're trading. Like maybe if I was used to trading Meta on the 4 hour, I'd be like, oh yeah, it comes under this a little bit all the time, but as long as we're above the blue, then we're good to go. Maybe that's it. Maybe I'll learn that there's reversals like this or things like that. There's little quirks and patterns that at least you have something to kind of supplement your price action trading so that you're not just out in the open. Even price action traders, if they're just doing price action, they'll always include some kind of moving average so that like, oh, I'm here on the underside of the 55 SMA, so now I'm going to be looking for shorts. Oh, I'm back above the moving average, so that means price is wanting to go higher than the average for now. Trading is not about calling tops and bottoms as much, I think. I think the best traders with the highest win rates and long-term success don't try and call tops and bottoms all the time. They just hop on board, they take their profit, and they walk away. That's the mentality that you need to have in trading. All right, and then the other thing that I have written down is with the bands, you notice the you start to notice the change from a range, like here we were ranging, and that ranging price action allows the bands to squeeze down, and you can confirm a breakout better. Like if you're in an area, I don't know if it'll show it. Yeah, see, here was a big run up, and you get those. You get those. And we can talk about that too. I have that aspects when you're in a trade of taking a partial profit. It's a common thing for people to do. Say goes way out here to this outer band, because see here it was kind of in between these bands. You get a really big push up with no volatility. You could cut your position in half, and then we'd have our entry down here, but we're at half a position. Let's see if it comes back to 487. Yes, that's it. We would have we would have lost it. So see, there was that change in attitude there. And like I said, if we go back to the weekly, look, there's just when you look at these highest time frames like the weekly, you get an idea of the potential for a move. So like if you're back here where it's squeezed together and you hop on board here, oh man, there's this nice close right above the bands after they've squeezed down like this. We're going to expect a big move up. So then you can ride it for a long time. And this is definitely what I like to look for in investing. Yeah. Let's see what's on my list. Okay, other things to look at. This is the way that I have my chart set up. Let's go to Bartcoin. I use my bands and I use an RSI now. I think I just learned a way to do it that makes a lot more sense. I used to use MACD for momentum, but the bands are Bollinger Bands. And when I studied Bollinger himself, he said, you want to accompany the bands with some kind of momentum indicator and some kind of volume analysis. So you want to look at momentum, which is price alone, and you also want to have some kind of volume analysis. These are volume delta candles. You don't have to worry about that because that's kind of expensive from TradingView. You can still run the strategy like this. Let's go to, I don't know. We'll do another. I don't want something that's dying. Shorts are sad. Let's do the old replay bar, and we're going to go to random bar, and we're going to trade. Oh boy. Oh boy. Where are we at in the weekly? Let's go. Top down analysis. Oh boy. Big red candle. We're kind of in a goofy spot here to try to hop on any kind of weekly, but remember what I said? Outside of the band, so we're probably going to expect some kind of reversion even to like the 34s. So let's go smaller. We're at 39 and the bottom of the band is 27. So here was 34. I keep in mind this 30, 34, 32, 50, 32.50 to 34.50 range is going to be this band to where I would at least expect a minimum movement here, especially after a big bearish engulfing on the weekly. So we are going to be looking for shorts. Sorry, but that's how it goes. Okay, so let's go down to, oh yeah, weekly down to daily. Down to daily, we have a potential push off of the moving average. No real volume. We're not going to worry about it yet. We're going to end up moving forward. But I just want to see where we're at. We are probably not going to get above 50 because if it bounces off of the middle, it's going to probably get rejected off of the 50 after there's been this big of an expansion. So I tend to think of the bands as supports and resistance, and they're dynamic. They're always moving on you. So you look multi-time frame. So let's go ahead and go down to the 4 hour, and we're going to watch price come up a little bit and look for a short. Okay, we went above that band. Here's the $50 range, right, that we were talking about in the, oh, it still isn't there, but we're in the $50 range that we were talking about on the daily. There's kind of a rejection candle. You could enter there if you want to be aggressive, but I want to show you the RSI. There's this range between 60 and 70 that if we're bearish, we're going to be we're going to expect it to come into there and get rejected. So maybe we go a little higher. Unless if we get nice. That's not really the nicest signal. There. That was our signal. This is the overnight session, though. I don't like the overnight session. Overnight session is everything but New York hours. That's these blue and gold horizontal bars where it's blank like this. You know, we could even go down to the hourly and see if we get we still want to be looking for shorts, I think. Not much there. There's the next day. Are we going to get a short entry? There's a lower high. They're selling off. Once it breaks this low, it's probably going to run. Let's see if we can do one on the hourly. So we're going to switch to sell market. It's kind of aggressive because we're not that squeezed. Kind of at the end of the day, too. I don't know. Should we wait till Friday? Push down. There's our actual entry signal. So it would have worked to enter there. But here's following the rules. Closes outside the band. My 21 EMAs cross the 50. So I guess we will short here. And we're going to stop loss above the previous high. Oh, I need a bigger position. We need like 10. No, 5. 5 would be, no, 40, something like that. Yeah, we'll do like 9 more shares. So then now we're risking $40. Oh, that's a little too high. Sorry, it should be 5, huh? So if you do that while you're in this, just buy back 5. There you go. There's our risk on a $1,000 account, 2% loss, and we're going to target. This one could be a runner because we did top-down analysis from like the 4-hour. It's going to run the lows, I would expect. And then some if we're looking at the daily, but the daily takes a long time. Let's go a little above. We'll go back to the mean here, 41.2. And you just play around with it, you know. I know I'm probably going a little quick, but let's go just a little above 42. Is that enough? Yeah, 1-to-1. It's probably going to run the lows even beyond that. But let's see. It happened right away. That's pretty fun, right? So yeah, that's how I use my bands. RSI didn't quite get there. These are divergences. No, that's not a divergence. We might, yeah. I have a video in the Discord here from New Wave Traders about using RSI. It's really good. Basically, he says when you get rejected out of this area, that doesn't matter. Even this kind of a rejection is probably not going to be the top. What you want to see is for it to come up into this little box, the 60 to 70 box, and divergence will be, that means this high is going to be lower on this high, and this high will be higher. We didn't get that here. I just went off a price action to where it's clearly selling off harsh, you know, with that weekly candle. Boom. Big dump. So either way, there we had our trade. We just got 2% on our account. And as your account grows, you can go bigger. If you have the money to refill your account, you can maybe go up to like a 4 or 5% after you've established a winning rate. I would still try and keep it pretty low to start off with, because you're going to incur losses at the beginning, and the main thing is to preserve your capital. So the other thing to look for, I don't know if we can find an area. Let's go ahead and exit this. A lot of people like fibs. Fibs are probably one of the only ways that I know to when you go something like this, where you're down here for a long time on something like Tesla, and let's say you get in a nice trade here, you take this breakout right here, you go, this is great. I have a great position, the weekly. Man, I can just hold this thing. It's riding up. You have the outside. Okay, I'll take profits after maybe this big red candle. You had a nice big run up. When can I get back in? Either right here, but let's say, where's price discovery? The way to do that is with fib extensions. So price went from the low to here, and it went to the golden pocket 618786. And then I like to use trend fib extensions. The trend is that what it's called? Trend-based fib extension tool. So you go from the previous low to the next high to the current low. And then you're going to be looking for one of these extensions. And it definitely extended really far. 1.618 is a good one to take profits on. And people did. 110, you see the reaction. Came back, but it kept going. 2.236 is another good one to take profits on. It got all bogged up in this area for a while. And then you could even do 3.3618 and 4.236, and beyond that, it's just like going ape. And that's about as far of an extension as you get, because you see it came back and it had to spend it spent the whole year of October 21 reconsolidating. So there was your big move, Trend-based fib extension is how you look for price targets when you have nowhere to the left to look to. You go all the way to the left and you're like, well, where do I target? I don't know. It's just going. Well, use a trend-based fib extension from the previous low to the previous high to the current low. And then it'll do it. So if you go low, high, low, it'll give you the next high. If you go high, low, high, it'll give you the next low. It alternates, is the way to think about it. Next on my list is fair value gaps. This is a cool one. A lot of people like. I think it can be useful. You see I have these boxes: fair value gaps and order blocks. So here's a bearish order block. Here's a bullish order block. That just means that one candle closed significantly higher than the candle below it or before it. Just like here, this one closed below, this one here, you have an order block. Unless if you get back above that order block, then you would expect a downturn. Unless if you get below a bullish order block, you would expect an upturn. And there was an attempt here at this order block, see, to get bought up. The market likes order blocks. The market also likes fair value gaps, to where it'll wick in, and you expect some kind of reaction there. So like here, there's a fair value gap in blue. Price left it, came back up, wicked in, and it went below. So you're like, oh man, I can still hop on board, especially because it's on the inside of the bands now. We could definitely trade this week where it's going to go down bearish. It's a common thing to see. Even if there's a fair value gap left behind that this didn't even wick into. There was no wick into this. It just pushed away from it. It's like, man, this is really bearish, but there's only so much of that it can go until it starts to range out. So you don't have to have an indicator like I do. You can see them pretty easily. You can mark them with boxes. It's kind of easy to see that, like, here on this side of this candle, this is as high as the wick went. So you could just take a box like this. You could go, here's this wick right here, and I'm going to go up to the end of the body, or the if the wick comes in, then that's your fair value gap, but we'll just go to the body. So right here is a fair value gap, and you can put text on it. Add text, FVG. And then you know, okay, so you can counter trade that, and you have bearish divergence, rejection from this zone. You could have sold here and targeted this fair value gap. That's another option. Structures. I don't like structures too much. I think people overplay them. Like, they'll be like, oh, triangles or head and shoulders, things like that. I don't think that they're quite as strong. Hold on, I'll be right back. Okay. Right. So structures, channels can work. Though to make a valid channel, you need at least 5 points of touching the channel. Where's the channel tool? I have it here. No, I don't have it here. Where is it? It's under trend. There it is. So, like, take it from here to here, and there to there. So you got 5 points, right? 1, kind of 1, 2, 3, 4, 5, and it just broke to the downside and then reversed. So you're like, oh, I'm gonna short here. It's just, they're really not my favorite. But for some assets, it works pretty well, but not all of them. So you just kind of have to study and learn. I wouldn't bother with them too much. I think the bands and a momentum indicator like the RSI is solid enough. And then in ranges, we don't really have ranges on this one. Well, we can see Wyckoff accumulation and distribution. If we look at Bitcoin, we have this come up, boom, higher, lower, bounce up, one more high, and we break the lows. You can kind of see it. It breaks the lows, fails to get back in. You know, you can sell here or here, even if it's at the bottom, because this is a breakout, retest, failure to get back in and above to the range. But there's also things like Wyckoff distribution, which are over here in technical analysis. Let me pull this up really quick. I'm going to put this here. Switch the stream. Here, the screen. Right here. Here we go. No, wrong one. TA resources. Oh, can't move that. Okay. So here in the TA resources, I put Wyckoff accumulations. These are really good to study, I think, in ranges. There's accumulation, which means it comes from above, forms a bottom, and it goes out the top. Reaccumulation, it comes from below, goes in the range, and it goes out the top. And if we look at Bitcoin here, it followed a, oh, those are my accumulation pages. It followed a distribution pattern. You have a high, down, higher, new low, push up to a new high. UT is above BC, comes back down, works its way up. Now, it doesn't have to match this middle section quite as much because there's no labels here, number one. But it's just ranging is all he's saying here. UTAD, I forget what they stand for, but there's one more break above, one more attempt, and then a push down. And then it breaks down below. Notice we have a new low outside of the range over here. Comes up, rolls over, goes down, distribution. And that's exactly what happened in Bitcoin. There's a come up, boom, push up to higher, new low, works its way up through UTAD, test with this little green candle, breaks down above at a test, rolls over, goes new low, comes up, fails to get back in, rolls over. That's a distribution range for sure. Wyckoff distribution. I think Wyckoff is a good edge to look at for when you're stuck in a range like this where you're just bouncing back and forth. You're like, oh man, which way is it going? Is it going to break out to the upside or downside? Well, when you kind of start to get to this range here where you see something that matches a full Wyckoff structure, then you can be like, oh, I'm looking for either a downside or some kind of reversal, because I think there is a accumulation that looks kind of similar. It would be a reaccumulation here. Yeah. See, there's a reaccumulation too where it goes higher, low, new high, new low, really new high, goes below, but it springs back in and it works its way up into the range again. So this was your fake out here on the spring. So with that big wick, if we could have gotten back up into the range, right over here, this wick, if we could have gotten up and held it and pushed up from here, that would be a Wyckoff reaccumulation. But because we rolled over to this side, it was a distribution. You kind of have to look at it at the end of it to see the full formation, but it still gives you an edge because look at how far of a move it gave you if you would have entered a trade in this range over here. Even at the lows, you're even outside of the range. At the lows, you went from 106 down to 85. That's a good 20% move. Are there any questions from you guys? I think we can finish up here. No questions. All right.